I'm Stephanie Broad. Thank you for joining us. Our guest today is Bram Bos, Lead Portfolio Manager for the Green Bond range at NNIP. Thank you for being here with us today, Bram.
Hello, thanks a lot for inviting me, and I'm really happy to take all the questions you have for me.
Well, that's good because indeed we have quite a few for you. So let's kick it off and let our 10 minutes together start now. So, celebrating a 5-year anniversary of managing green bond strategies and now offering a complete product range with the launch of the Sovereign Green Bond Fund. Could you reflect on these milestones a bit for us?
Yes, of course I can. In 2016 we started our first green bond fund with only 20 million euros. As of today it has been growing to close to 4 billion euros assets under management of dedicated green bond strategies. We are currently offering 4 dedicated green bond funds with the launch of our Sovereign Green Bond Fund this month. And in terms of our team, we have been expanding from 2 full-time employees to 7. So we have the largest, most dedicated green bond team in the market globally.
It seems the green bond market is evolving fast. How is the market changing?
The market is growing tremendously and really has grown from a niche market to a mainstream market. We expect for 2021 the market to grow 300 billion euros globally, bringing the global green bond market to 1 trillion euros. And that is really a mainstream fixed income market, larger than the European high yield market and also larger than the global convertible bond market.
Now let's look at the investor base. Who is buying green bonds?
We are seeing a very diversified number of investors investing in our green bond strategies. Not only from Europe, but really across the world these days, which is really interesting because most investors initially were from Europe. Next to that, we also see a combination of retail institutional investors. In particular, in the last couple of years, institutional investors have found the green bond market because they feel comfortable about the size, liquidity and the performance of the green bond market.
So demand is growing worldwide. What about the supply side? What trends do you see in green bond issuance?
We have seen in 2020 a very strong pickup in terms of issuance in some new sectors in the green bond market. For example, insurance, car manufacturers and chemical companies. They were all relatively new to the green bond market. And for 2021 we in particular expect a pickup in green sovereign bonds.
So this is mainly why you launched the dedicated sovereign fund now that the market is blooming and so well diversified.
Yes, absolutely. As I just mentioned, we expect a very strong pickup in green sovereigns this year. So for example, Spain, Italy, UK, they will all start issuing green government bonds. And lastly, we are really completing our green bond fund range with the offering of our green sovereign fund. We already have our flagship green bond fund, our short duration fund and our corporate green bond fund, and this really completes our green bond fund range.
Now let's talk about the funds. NNIP is the first and only manager to offer both a dedicated sovereign and a corporate green bond fund. What advantages did this offer investors?
This gives investors a lot of advantages, in particular for institutional investors, because in their asset allocation they make a separate allocation to corporate bonds and government bonds. And it gives them the flexibility to allocate between those 2 subcategories within fixed income. So basically, with the completion of our fund range, we are giving investors the possibility to completely greenify their fixed income portfolio.
Could you tell us more about green bonds from a return perspective?
Yes, of course I can do that, and this is one of the most asked questions I've heard from all our clients over the last couple of years. If you look back over the last 5 years, green bonds have been performing 4 out of 5 years better compared to regular fixed income. That is the case for aggregate green bonds, but also for corporate green bonds and sovereign green bonds. Clients are starting to accept and understand that green bonds have performed better and probably will also do in the near future. If you look at a portfolio of green bonds, it only includes issuers who are innovative, forward-looking and less exposed to ESG and climate risks, and that's also why we think that outperformance against regular fixed income will remain in the future.
Now we've come to our last question for today. So Bram, could you tell us more about your expectations going forwards?
Yes, as I already mentioned, we expect a strong growth in 2021, But in the next 3 years, we expect the global green bond market to grow to 2 trillion euros. So that is really a very sharp increase from where we are today. Next to that, what we are seeing that investors are including green bonds as part of their regular fixed income portfolio. So they are not seeing it only as an impact investing anymore, but it's really becoming a mainstream product and being included in regular fixed income portfolios.
And now that we've been talking about this for almost 10 minutes, I see you really enjoying it.
Yes, absolutely. I'm so passionate about green bond and how the market is developing. I have a great, enthusiastic, ambitious team. And climate risk is a very big topic. And in the financial industry, it is something we can tackle.
Indeed, the future certainly looks bright for green bonds and its investors. But for today, our 10 minutes together stops now. So thank you, Bram, for this insightful Q&A.
Thank you, it's been my pleasure.
And thanks to you also for watching. I hope you enjoyed the discussion as much as I did. We'll see you next time. Don't miss it.